there is a key item which we need to always understand. When it comes to audit and assurance, and this has to do with internal audit. You cannot do audit without looking at internal audit. So I want us to look at internal audit, and I'll highlight one item which I would expect that maybe you go and do some in-depth research. ISA 610, the external auditors placing reliance on the work of the internal auditors or using the work of internal auditors. Okay, I'm going to share the screen with the issue on the internal audit scope and work, and then why the need for internal auditors, and then I will try and incorporate one more item. Okay, I'll incorporate one more item, which is the client acceptance procedures. All right. So for internal audit, what we need to understand is their role, their function, differences between internal and external audit, the role of the internal auditor in public sector, and then this is what I was highlighting, the 3 asterisk items there. What are the criteria for external auditors to use the work of internal audit? I wouldn't touch on it in depth in this particular presentation, but I would expect you to go read on it. Then explain the option for outsourcing internal audit and then ethical issues involved. All right, so let's see what we have over there. So from the IIA, Institute of Internal Auditors, they have issued a statement on the responsibilities of internal audit, and they state that the organizational status of the internal auditing function should be sufficient enough to permit accomplishment of each audit objectives or responsibilities. Now, you would have a CIA, Chief Internal Auditor, some will call it Chief Audit Executive, some will call it the Chief Auditor, some will call it simply the Internal Auditor. This person should be responsible to an individual in the organization with sufficient authority to promote independence and to ensure a broad audit coverage, adequate consideration of audit reports, and appropriate action on audit recommendations. Usually, you'll find the audit committee serving this particular role. So you'll find the internal auditor or chief internal auditor reporting to the audit committee, or sometimes you have a regional director of audit, and this person must be independent enough to assist in this direction. There are differences between internal and external audits. Let's look at them. Objectives. Internal audit is looking at overall risk management of the company, the process, the systems of control, and then they will make recommendations as to whether the company has been able to achieve its organizational objectives. But for external audit, they simply come in to help review the work and then provide an opinion on whether the financial statement provide a true and fair view, all right, and whether proper accounting records have been maintained. Responsibility of internal audit is to management. External auditors is to shareholders. So external auditors will report on the financial accounts on an annual basis, but for internal audit, it is an ongoing basis to management. Internal audit is carried out by employees of the company. They sometimes can outsource it. They can sometimes right-source it. Outsourcing means you give the entire function to an outside body who will run the show. Right-sourcing means you have some internal auditors, but you bring someone to assist them, okay, to do the work. But external audit is carried out by a totally independent external body, right? The scope of internal audit deals with all aspects of the business, all aspects, including operational, compliance, tax, name them, every aspect. External audit has a scope. It has its audit program, its working papers, queries and explanations, letter of weaknesses, non-reported weaknesses. So their scope of work is defined by the terms of engagement they've agreed with the company. That's it. So as to what I've been asked to do is what I'll do by internal audit every aspect. They both use risk-based approach. Actually, they both use risk-based approach. They all do test sampling, they verify assets, okay. Internal audit will evaluate internal control systems. External audit also evaluates internal control system to see if it is operating effectively, okay. Now we test, external auditors, they will test based on which financial accounts are produced and verify the systems. But for internal audit, to test the systems, to test the numbers, to test everything, whether they've been given these or not. So their work is a bit comprehensive, let me put it that way, because it covers almost every aspect of the company and on daily basis or on routine basis. The legal status of internal audit, they report to management. There's no specific legal requirement to report according to the UK or to report in line with the UK Corporate Governance Code. But it is mandatory in the public sector. For external audit, their legal status is that they report to shareholders based on the Companies Act 2006. Now, the internal audit function is seen as a quality control system and a risk management system and corporate governance procedure. So quite comprehensive. Okay, quite comprehensive. Scope and objectives. According to the Auditing Practices Board's guidance for internal auditors, they evaluate, examine, report on how adequate the internal control systems are. And it is done at a very reasonable cost. Again, they must be personally objective. Okay, they must maintain some personal objectivity. They must be professional at the highest level, excellent in terms of knowledge, understanding, competency. And they must work within the resources provided to them by the company. They develop a comprehensive audit plan with full evaluation and recording of the systems of internal control. Now, they also ensure thorough evidence gathering. They report per guideline set or per agreed timeline set, and they follow up on procedures. In fact, they sometimes follow up, not that they sometimes, they usually follow up on the audit recommendations provided by the external auditors. Again, under the scope of IA, they look at the financial systems. So talk of the annual accounts, the management account, the budgets, any variance analysis, the numbers, look at that. They also look at the managerial system, so strategic planning, performance monitoring, mergers and acquisition, investment appraisal, human resource, recruitment, hiring, security, name them. They also look at operational systems, so like house letting, operating theater management, student recruitment. Of course, these vary across organizations. So depending on the operational systems of the organization, they look at that. Now, to facilitate effective IA functions, the internal audit must have sufficient status within the organization to fulfill its roles and objectives. What do I mean? They must be independent. They must be qualified. They must be recognized so that they can do their work well. All the support they need from senior management, supporting them to be independent, they must get it to do a good job. They must also project a modern professional image, very professional outlook, not compromising on their values. And they must also operate with the necessary independence they have. So reporting line, mostly, they will have administrative reporting to maybe senior management, but they should have a functional reporting to an independent body like the audit committee or the director of audit or a regional director of audit, or that's it, something to maintain their independence. So their independence is important. Independence here means they are independent in terms of their reporting. They are independent from their lines of operations, no conflict of interest, not being manipulated, their position independent, and their mindset independent. And you need a qualified, competent person to run an internal audit function. If you want it to be very independent. Objectivity. The Institute of Internal Auditors statement states that objectivity is an independent mental attitude which internal auditors should maintain in performing their audits. They are not to subordinate their judgment on matters to that of others. So don't be intimidated. Let me put it that way. They should not be intimidated to provide falsified reports. That's it. Okay, so they must be so objective, being truthful and honest, and presenting facts, figures, and findings as they are. Performing such activities requires someone who is in good standing. Okay, so drafting procedures for systems and designing these systems, installing and operating systems are not audit functions. Therefore, performing such activities is presumed to impair audit objectivity. But it happens that in the organization, sometimes they'll call the internal auditor, help us to design this, help us to install this, help us to operate this. They actually know their system, their role. They are supposed to oversee whether these things have been implemented by a third party or somebody in the organization and it is running effectively. If I implement something and you ask me to go and review that system, you think I'll crucify myself? No way. No way. So they expect someone to implement it. They can guide you. They can give you some highlights, but for them to practically take part in designing, installing, and operating will impair their judgment. It will impair the objectivity. Now we have what we call value for money audits, usually in the organization, public sector. Economy use least cost but obtain the highest quality. Efficiency, you use the best use of resources. So like if I can use 10,000 to achieve objective A, and I can alternatively use 7,000 or 5,000 to achieve the same activity at a lower, at the same quality, that is efficiency. Okay, doing things right. Doing things right. And then effectiveness, achieving the best result. So you achieve the objectives, doing the right thing. Okay, you achieve the objective. Then we have best value. So the 4 C's. Challenge, review and question the processes as an internal auditor, compare with other providers or other methods or other numbers, consult all users who are involved in this activity, and compete, performance management, comparison to make sure you are doing the right thing. So they undertake project auditing. Any project being undertaken, they cannot undertake it. They also do financial internal audit. So they audit the books of account and then see if everything is being reported in accordance to statutes and laws and regulations. They also undertake internal audit in terms of operational audits. Now they operate in key areas, every aspect: purchasing, procurement, sales, marketing, treasury, HR, security, IT. They operate everywhere. Okay. And they do their work as if they are external auditors, but we know the differences. So because they must maintain the highest level of objectivity, highest level of professionalism, okay, and integrity. This is how their process normally works for internal audit. They will identify a risk, they will establish controls, they will test the controls and draw conclusions. So normally this is how the internal audit function works. And for every organization, this is what should be done. Every organization is not immune to risk. There are risks. So identify any risk, establish any controls which we have already existing. If there are none, then it's a red flag. If there are already existing controls, test them to see whether they are working correctly and draw conclusions. Risk management is a key part of the IA function. The IIA has given a comment there. Let's go through quickly. An independent IA function will, through a risk-based approach to it, will provide assurance to the board of directors and senior management. And how do they do this assurance process? It will tell you how effectively the organization can assess its risks and manage its risks. And it will also include assurance on the effectiveness of the first and second lines of defense. Question is, what is the first and second line of defense? The first line of defense in an organization, let me put it in a layman's language, the third line of defense is the audit. Okay, the third line of defense is the audit. But the senior management must put in place control. And they themselves must ensure that the controls are being implemented. You get it? So controls will always help us to ensure that things are done right. Senior management must ensure this one is working. If senior management is not able to see that it's working, then auditors come in. The levels of defense, okay? Now it encompasses all elements of an institution's risk management framework, from risk identification, risk assessment, response to risk, communication of risk-related information, and all categories of organizational objectives. So talking of strategic objective, ethical objective, operational objective, reporting, compliance, everything. That's risk management, quite comprehensive, right? So these are the 3 lines of defense. I mentioned the 3 lines of defense. We have the internal controls of the system. They will normally prevent the organization from actually making mistakes. The next one is that the management, okay, the risk management, compliance function by management. Then the internal audit comes in. Yeah. Okay. IT audit is one of the key items that internal auditors will undertake. Skilled computer-based internal auditors will greatly assist external audit, providing the external auditors can properly evaluate the work carried out and derive sufficient reliable evidence of their own to validate the work done by internal audit. So ISA 610 comes in handy here. If the external auditor wants to place reliance on the work of the internal audit, what does he do? He must ensure that he can satisfy himself that the work done by the internal audit is reliable, and they themselves are what? Competent enough to have carried out this task. Now, options for providing an internal audit service. 4, we can use in-house staff, employees of the staff of the company. There are advantages and disadvantages. We'll look at that and we'll wrap up. You could also outsource it totally to an external service provider. Or you can also write source. You have some guys in-house, bring some people to come and join. And then you can also undertake consortium and agency arrangements. Now, the external auditor cannot provide internal audits to your company. It must be done by a different firm. But the reality is what we see now is that you see the audit firm and it will have an advisory unit. Then sometimes the advisory unit is providing internal audit services to you. And then the audit unit will come and audit you. It's still a conflict of interest item there, okay? Okay, so the in-house, when you use people in-house, what is the benefit? They will maintain confidentiality. Your information doesn't go out. These are people who understand the nature of your business. So you are better assured that they can do a better job, right? They already are part of the organization, so you could be, again, assured of some better working relationship with the staff because they don't see the auditor as an outsider. There's also shared commitment. If I'm an employee of the company, I share in the aims of the organization. Continuity of staff. The staff continues to work with us. He doesn't leave and go and come, and when he likes, he comes to audit us. No, continuity is there. There are fixed costs, no hidden extras, because we're paying them salary. We know we are paying them maybe some fees for traveling. We know the cost, okay? So there are no hidden charges. It is a service to the organization which is not dependent upon selling additional work. So we are helping ourselves, more or less. It's a family, we're helping ourselves. Now the staff is able to retain skills and knowledge within the organization. Somebody comes, we train him, the person understands the system. We don't have to reinvent the wheel. You got it. Drawback, there's lack of flexibility. It's like you are being controlled sometimes, you do what the organization wants. It's also quite difficult to rise through the ranks. Career progression can be difficult. What happens is that if somebody doesn't leave as a chief internal auditor, you will still be where you are as a mere internal auditor. The cost of regular training and updating of staff can be high. We have to update their knowledge, we have to update their skills, so it comes with cost. Small numbers may mean the range of skills may be restricted. If we have small number of auditors, more or less, we may not get the right skill set or the skill set to be restricted. Again, if we don't get new guys to join this staff, they will be stuck to their old ways of doing things and there will not be fresh inputs. Complete independence can also be difficult to achieve because they are part of the organization and it's difficult to achieve independence. A lack of available resources for small organizations. Small organizations sometimes find it difficult to get the right resources to support the internal audit function. When you outsource it, you buy it from outside. What is the benefit? They are independent from the organization, so they can do their work objectively. No staff administration and training requirements on the company. These guys will train their own staff and bring them to help you. They bring in new ideas from the sector. So you get some cross-fertilization of ideas, new brains, okay? They know the sector, so you can be sure they come in with new ideas. Flexible resources available. Yes, today they can bring this person, tomorrow they can bring another person because they know what they are doing. They've got the competency. Like I said, they have full access to technical expertise and ancillary services. And it's a flexible contract. They only work, you pay them for what they have done. That's all. If they don't work with us, you don't pay them. So tell them, come every 3 months and come and work and you get your pay and you go. That's it. But the weakness is that they can be very expensive to outsource. And you sometimes will not get them readily available. You need these guys to come and they are busy somewhere. Now, staff continuity at junior level is less certain. Don't worry. It's less certain. There's loss of control of quality of staff provision. So difficult to supervise them because they are not part of the organization. And there are contract restraints. They only get what have been specified and agreed to pay for. So they may not be able to go outside of the box and work extra. That's it. When you go for a consortium agency arrangement, I'll run through this quickly. Benefits is that there is a direct control over the service. Again, continuity of staff is assured. Costs are restricted to the services they provide. Again, they can be independent from the company and they can share good practice with other members of the organization. The drawback is that divided loyalties, they may be serving two organizations. We can't control them, control of resources, who gets the best service, we can't. Again, any ancillary service they want to provide, you have to pay for it, so it becomes expensive. Difficult to manage the flexibility there. Quality of service may also deteriorate over time without fresh input. It's an agency, and their pricing can be quite inflexible once you have agreed. Right sourcing, bring in specialist guys to join us to help us do the work. And it is useful for audit in areas where there are technical expertise, like taxation, contracts, fraud investigation, IT. So the major disadvantage is that the specialist advice is not cheap. They are very, very expensive. But again, you get some fresh inputs and good inputs and value for money. An assessment of risk and value for money factors will have to be undertaken before proceeding with this particular option. Okay. So I'm wrapping up briefly here. Primary reporting line for internal audit is to managers. The aim of every internal audit report is to prompt action, management action to implement recommendations for change, leading to improvement in performance and control, to provide a formal record of points arising from the internal audit assignments, and where appropriate, of agreement reached within with management. Okay. Their reports are quite detailed. They can be constructive, detailed, and concise as well, based on the evidence they found, of course. So it is more like a management letter. They will tell you the purpose of their report, the scope of the work, the extent of work carried out. They will provide you with the findings from the work they've done, the conclusions they've drawn from the assignments, and they will provide you with recommendations on how to fix the issues they have done. And again, they provide an action plan. Who is supposed to do this? When are you supposed to do this? And when are we coming to follow up? And the management must acknowledge that they've taken these actions, that they have plugged them or put them in place. Now, large reports will also contain some executive summary for managers, busy managers, who do not have the time to read the entire paper. So you get executive summary and see the scope of work, extent of work, objective of the work, findings, recommendations, conclusions, actions to be taken. All right. Terms of reference of an internal audit. It should include the report, actually. Who is the report for? The specific instructions regarding the assignment, any scope, limitations, if any, the format of the report, who, distribution, who is to be copied in this report, the timescales to produce the individual report. Note, internal audit can be a mixture of oral presentation and written reports. And so normally they are called to meetings and they present their reports. An independent internal audit will have its own schedule of work and reporting procedures. So you normally have what we call the audit plan for the whole year. All right, so these are questions on internal audit. You would want to look at them. So the types of what internal audit, so the right sourcing, the outsourcing, all come in handy. All right. I'll end here, and then the other section, I'll do it separately so that it doesn't become too bulky. All right. Thank you. See you soon.